last year of the career, the undergrad career of Universidad Austral, and for them it's a very important day today, because apart from all the knowledge and all the skills and things that they have learned throughout the process, today it's a very, very important day because today they present their final work. Yeah, today is the day. Well, after this brief introduction that I want to give, now I'm going to present the judges. I think, Jorge, you are going to move up to the screen. So let me start, first of all, presenting, one second.
Necesito, por favor, que me pongan como anfitrión. Hubo una caída acá. Perdón.
Ahí estamos.
¿Estamos ya? ¿Seguimos? Okay. Well, now let's move to the second part of today's competition. I'm going to start presenting the 5 staff or 5 people who are helping us in judging the different works that the 4 teams have created. I'm very happy to be presenting them because apart from the fact that they are excellent professionals, they are all my friends as well. So it's an honor for me to have them on board and helping us today with this event. First of all, let me introduce you to Guillermina Morin. Guillermina is currently head trader at Rosenthal, and she's member of the Financial Markets and Products Committee at Rofex. Prior to this, she served as functional platform consultant at Primary and as an auditor at Rofex. She's a public accountant by the Universidad Católica, and she holds a master's in finance from Universidad Austral. Additionally, she holds an IPAT certification in algorithmic trading by Quantinity. So, Guille, thank you for being here today.
Hi, thank you very much. I am very happy to stay here and be part of this. So the best wishes for the people who are going to be the exposure here.
Thank you, Guille. Thanks a lot. Well, second, let me present Benjamin Masoud. Benja is also an alumni from Universidad Austral. He did his master's in finance. He finished last year. Benjamin has held various roles that include financial advisor, financial planning, and strategy. He earned his master's in finance from Universidad Austral, and he holds a bachelor in the Faculty of Economics and Statistics from UNR. Also, Benjamin has been approved by the Comisión Nacional of Valores as a financial advisor. So, Benja, thank you as well for being here today with us.
Thank you for having me. Good luck for everything today. Enjoy it also.
Awesome. Third, Matteo Roccini. Matteo is also part of the finance department at the Universidad Austral. He's professor in the Master of Finance of Behavioral Finance, and he's currently living in Buenos Aires. He holds a bachelor in business administration by Universidad Austral, and he has 5 years of work experience in the Argentine capital markets, working in 3 different brokers, and he's currently working in StoneX as senior research analyst. He's also a Universidad Torcuato Di Tella alumni from his Master's in Finance program, and he's currently a CFA level 2 candidate. So, Mateo, thanks as well for being here today. It's an honor to have you because you are an expert in research, so you will add lots of value to the marks and the feedback.
I would like to thank you, Federico, for the invitation. This is really something that I have enjoyed much. Bringing these teams' research reports, they were excellent. And thank you very much. It's a good thing that you said the candidate at the end of that of that designation, because if not, we would both be in trouble.
Definitely, because I guess it's going to be saved in video, so it's something good for all of you guys, also for the students, because you are going to have lots of exposure to different companies that they are looking for people. So this is a great way as well for you to enhance your CV and to start developing further skills. So thank you, Mateo. Then we have the fourth person in today's judge, that is Eric Machta. Eric is a great friend of mine. He's also located in Buenos Aires. I met Eric a couple of years ago when we both went with a student scholarship to the UK to do our masters. Eric holds a master's in science in international development from the University of Manchester. He's currently working as a portfolio manager in one tier water capital, making suggestions and investment recommendations from companies and individuals from Argentina and different parts of the world, and working with different ALICs in the local environment. He's also a partner in Fineco Advisors, which is a company that we both hold together. So Eric, thanks a lot for coming here. It's a privilege to have you on board.
Well, thanks a lot, Federico. It's been very fun. It's a pleasure to be here. And I also have to say I was surprised by the quality of the work the students have done. So I want to congratulate them all. And thank you for having me.
Thanks, Eric. And last but not least, we are going to bring to the judges the oldest, the most experienced, the one with the most strong name here on the judges. We have Marcelo Rossi. I'm sure all of you know him. He's the head of the finance department of Universidad Austral. He's a full-time professor. He's also a part-time professor at Yale Business School, and he's currently the director of the Masters in Finance in Universidad Austral. He holds a doctor in business administration from the University of Sarasota and an MBA from Yale. And he also has graduated as a CPA and a Bachelor of Business Administration from Universidad Nacional de Rosario. He's a board member at Matbar Ropex and part of the executive board at Bolsa de Comercio de Rosario. And he has developed a deep professional consulting experience in subjects related to finance. So Marcelo, thanks a lot for bringing your experience today to the board.
Thank you, Federico. I feel like the granny of this excellent group. So it's for me a pleasure to share with you, my friends, my colleagues, my students too, to share this moment. I feel really glad to be here with this excellent jury. So thank you very much, and good luck for everyone. So just coming in this instance is the real winner of the whole team. They're not winners or losers. So good luck for everyone.
Thank you, Marce. Well, Javi, I give my word to Javi, who is also going to the other professor of the subject, and we are going to be guiding you through this transmission.
Good evening, everybody. I'm Javier Alba, and together with Federico, we have been shaping this competition, this year of finance and valuation competition. Allow me to introduce to you the company the students had to research and evaluate. Vista Oil and Gas is an independent Latin American company founded in 2017. The company went public in the New York Stock Exchange in 2019. And by that year, it was already the 6th largest oil producer in Argentina. The company is led by engineer Miguel Galuccio, former CEO of YPF. Well, I don't want to give away too much at this point, but let me share with you a video where we can hear from Miguel Galuccio himself.
Javi, no sé si se escucha. Javi, discúlpame.
Sí.
Creo que no se está escuchando el audio.
¿No se está escuchando el audio?
No.
Ay, cuando vas a compartir, poné donde dice Share with Sound, compartir con sonido.
Permítanme.
O sea, cerrá y volvé. Ahí está.
So walk me through the kind of company that you want Vista to be.
So Vista, first of all, it's an SPAC company, as you mentioned. We born with innovation in our DNA. We raised $800 million of cash, and today we are in the march of making our first acquisition. So we want to be the new breed of company in Latin America, an independent company that is focused on Shell, have a high growth plan, and deliver value to their shareholders.
I'm glad that you brought up raising money, because you listed in Mexico with a $650 million offering. You then continued to raise money from outside. How easy is it to raise money, and who are the investors that you're pitching to?
Well, as you know, the SPAC is not an easy business proposition because you basically raise money with no asset. So what matters is your vision and your track record. But we got the backing from many investors, institutional investors from US, SPAC specialists, hedge funds, sovereign wealth funds from Middle East. So we have a big range of investors that have backing up. They like the idea, they believe it's a very good value proposition, and they believe in the track record of the team. That is probably the most important thing.
Basically yourself is what you're saying. They like you.
Yeah.
All right, Fede, if you want to take over introducing the first team.
Perfect. Thank you, Javi. Well, before presenting the first team of the four that are going to make the presentation today, let me as well say my congratulations to the four teams. I have read the feedbacks and the marks from the 5 judges that we have today on your written report, and what I can say is that the 4 teams are very close to each other in terms of marks. So the winner of today's competition is going to be defined completely by your performance that you have today and you make today in today's presentation. Yeah. So all the best for you. You have 10 minutes to make your presentation. I'm going to be taking the time, and after 10 minutes of your presentation, we are going to move to 10-minute question and answer session where different judges are going to ask you different questions. This procedure is going to be the same for the 4 teams. So 10 minutes of presentations plus 10 minutes of questions and answers. Everything fine? Everything clear? Fantastic. Okay, well, let me first introduce to all of you the first team who is going to make the presentation. Team number 1 has members which are Antonella Mochen, Ramiro Bassone, Máximo Braida, Juan Cruz da Veiga, and Patricio Brandolini. I was the coach of this team. So let's get started. All the best for you. Who's going to share screen?
I am. I'm going to share.
Perfect. Once you start, I'm going to start with the timer. So it's all yours. Good luck.
You tell me, Juan.
So wherever you want.
Okay. Good afternoon, everyone. We are here to present our analysis and recommendation on a company engaged in the exploration and production of oil and gas, a capital-intensive industry whose entry and exit barriers are very high. Led by YPF with a funded index of 0.19, the market is highly concentrated. Ladies and gentlemen, today we present to you Vista Oil and Gas. Its activities started in April 2018 and are mainly located in Vaca Muerta. Without market power, the company is currently the 5th largest oil producer in Argentina. So, dear honorable jury, please take notes. With a one-year target price of $6.18, offering 179% upside from its closing price on November 6, we issue a buy recommendation. This advice is supported by 3 key catalysts: a high-performance team, a high operating efficiency, and a premium location in Vaca Muerta. All of them combined with our solid financial analysis. Please, Antonella, give us an overview of the team performance.
The experience and knowledge of the team has allowed Vista to increase production and reduce costs since its beginning. The team is led by its president and CEO, Miguel Galucio, who has more than 25-year experience. The other members are Pablo Verapinto, the CFO, Juan Garobi, the COO, and Alejandro Cherniakov, Strategic Planning and Investor Relations Officer. All of them have at least 13-year experience, not only in oil and gas industry, but also in Vaca Muerta.
Following with the next key driver, we can see that the company was able to reduce lifting costs in almost every quarter, with an exception on the first quarter of this year, when operation had to be halted due to coronavirus lockdowns. On the other hand, drilling and completion costs per well, which now sit at 11.7 million, are expected to be reduced to just 10.5 million. And complementary with an increase in well productivity due to a new and more complex well drilling method, this will lead to a reduction on drilling and completion cost per barrel of oil equivalent from $8.5 to just $7. Ramiro, could you please explain us the last key driver?
Thank you, Patricio. As you can see, the third key catalyst that supports our buy recommendation is the premium location that Vista holds in Vaca Muerta. More than 25% of the company's concessions are concentrated in this formation, representing 99% of Vista's share production. The highlight of these assets is the fact that they are surrounded by those that have already carried out successful pilot tests, and therefore their exposure to geological and operational risk is reduced. We know that Vista has more than 400 wells in Bajada del Palo Este, which are expected to produce between 1 and 1.5 million barrels equivalent during their lifetime, being among the best in basin. If we do the math, we can see the company has approximately 500 million barrels equivalent of potential proved reserves in addition to the current ones.
Before going to evaluation, we would like to present a brief summary of some key historical financial data. Vista revenue was 331 million in 2018 and 416 million in 2019, representing an incrementation of 24%. However, we expect a drop of 38% by the end of 2020. The EBITDA performance in 2019 was 26% higher than in 2018, but we also expect a drop due to this anomaly year of 60%. In terms of cash generation, Vista has shown an excellent performance. By the end of 2019 and third quarter 2020, the cash ratio was about 1, which we believe is fantastic.
In our valuation, we work with 2 different methodologies, an intrinsic and a multiple valuation. Let's begin with the first one, the DCF model, whose target price arrived at $5.99. Due to the fact that E&P company value mainly come from its reserve, we have modeled an traditional DCF, which consists in forecasting cash flow until reserves are completely depleted. Accordingly, there is no terminal value in our model, and we estimate the future cash flow to be depleted for 2043. This period is derived from 3 estimations we have made. First, Vista's total reserve, which Ramiro has just explained. Second, the drilling plan, where the management claimed to be drilling 16 wells per year from 2021 to 2023, increasing to 32 wells per year and onwards. And third, the daily production, where the company is currently producing 25,000 barrels equivalent per day, representing a 55% of its entire capacity. According to the management, Vista will be producing 80,000 barrels equivalent per day in the next 7 years. When that level is reached, the firm will keep its production flat in order to generate cash flow for its shareholders. Please, Juan, give some value to these quantities.
History showed us that local price differs from international price. However, according to the management, when international price fluctuates between $40 and $60 per barrel, local price moves fast and companies are able to sell its product at that price or close to that. This happens because when international price breaks the floor, companies can use government regulation as a hedge. Barril Criollo was an example of this. On the other hand, when international price breaks the cap, companies are unable to sell its product at that high price. So, in order to model it, we have established these 2 boundaries. To work on DCF, we have modeled a slow incrementation from the current level to $50. And when that price was reached, we fix it until the end of our cash flow. As we will discuss later, we incorporate the possible fluctuation in our Monte Carlo simulation.
Great. Now, I will proceed to explain the rate at which we discounted those cash flows. On one hand, we have calculated the cost of capital with the capital asset pricing model. By using the current 10-year risk-free rate of 0.8%, a market risk premium of 9.2%, and a beta of 1.7, we obtain an expected rate of return of 17%, to which then we add different layers of risk corresponding to Vista, such as a size premium of 3.1% and the average Argentinian country risk premium of the last 10 years, which is 9%, to arrive at the total cost of equity of 29%. On the other hand, to compute the cost of debt, we use a regression model to estimate yield to maturities for the next 10 years. And then we use the average of these estimated yield to maturities as the cost of debt. The reason for applying this methodology is that the company, being quite new, has only issued $3 bonds so far, while the management expects to issue many more bonds in the near future in order to fund capital expenditures to develop new wells. Lastly, to compute the weighted average cost of capital, we use the average Latin American exploration and production capital structure, which is 55% debt and 45% equity. And combined with our estimated cost of debt and cost of equity, this leads to a WACC of 17.3%. By using this WACC to discount cash flows, we determine that the enterprise value is 951 million. And when we subtract the net debt, we obtain an equity value of 654 millions. That, with a discount of 20% due to lack of control, this will give us a share value of $5.99.
For the relative valuation, we selected 5 comparable peers with the following criteria. Firstly, they must be focused on the upstream sector of the oil and gas value chain. And secondly, they must carry out operations in developing countries. Through this methodology, we reach a price of $6.66, weighing equally our 3 different metrics. The first one is called price per flowing barrel and relates the enterprise value of the fields to their daily production. The second is probably the most commonly used in the industry due to the fact that it excludes operation expenses from the traditional EBITDA. And the last one includes the reserves, which are the resources that will support the E&P company's operations in the future. Thus, it gives us a look at the sustainability of the teams in the long run. As we can see on screen, the 3 metrics indicate that Vista is undervalued, supporting our buy recommendation. After going through our 2 valuation methodologies, we can decide to give them different weightings. We assign just 30% of relative valuation due to the fact that we could not find many suitable comparable fields. However, we added it because we believe that it's necessary to add the sound of market conditions to our analysis. On the other hand, we reward the intrinsic valuation with the 70% because it allows us to make a deeper analysis since we work with much more variables.
In order to prove if our model was robust enough, we have developed a Monte Carlo simulation to analyze how would our target price react when changes in our assumptions happen. The variables that you can see on the screen are the ones that we may vary. After running 20,000 scenarios, we have got a 91% chance of getting a buy recommendation, 55% chance of getting a buy recommendation with more than 179 potential upside, and a 9% of downgrade or recommendation to sell. In addition to that, we have developed a sensitivity analysis to discover to which variable our target price reacts more. And after making them change more minus 10%, we conclude that Vista is more sensitive to changes in oil prices. This is a variable that you, as an investor, need to be more concerned about, because keeping everything else constant, a drop of 19% would change our recommendation to sell.
Okay, before going to our final conclusion, we believe that today it's important to analyze ESG area. As the numbers show, Vista has a high social and governance contribution, but not so on the environmental side. That doesn't imply that Vista pollutes the environment. That number is because it's a new company and they have not issued an environmental report yet. However, they are starting to implement some measures. For example, 99% of production is transported by pipeline, and they are started using some boxes to reduce airborne dust. Regarding social perspective, Vista helps the surrounding community and also implementing a security system for employees and suppliers. This allows it to reduce the total rate of incident by 68%. According to governance, Vista is engaged in implementation of solid corporate governance principles that strengthen the credibility of the company. Also, the company has a board of directors made up of 6 members, of which 67% are independent.
To conclude, another reason that supports our recommendation is our technical analysis, as we see a very good buying point close to current level. Just in case, we repeat it again. With a target price of $6.19, we issue a buy recommendation. Thank you very much for your attention, and the floor is open for questions.
Okay, thank you very much for your presentation. Very good. Now let's move to the question and answer session. We are going to have 10 minutes where the judges have the chance to ask questions to you. Who is going to be the first one, the courage one, asking the first question?
Okay, Fede, if you want, I can ask something
Sure.
to the team. Well, first of all, congratulations for the presentation. And can you, when you mention in your very first slide the border analysis, I saw that the threat of substitute products was at the minimum level, right? Can you hear me?
No.
In your very first slide, with the border analysis, we can see that the threat of substitute product is at the minimum level, right? What's your opinion about alternative energy, such as green energy?
Okay. Yes, we definitely did include that as a risk in our model because according to the International Agency Energy, the demand for fossil fuels, such as oil and gas, in 2040 will be between 30% and 40%. So, despite the renewable energies are gaining share in the global demand of fuels, the fossil fuels like oil and gas will still be one of the main sources of energy in the world. Accordingly, we don't see a threat in that area.
In addition to that, we believe as well that the fact that Vista is operating in Argentina and they are forced to sell first its products at the local market, we believe that Argentina has other priorities first that impose regulations in terms of this kind of new energies generations.
Yeah, I would like to add that to what Juan said, that the growth of renewable energies in our country is slower than in other countries. There are no big players who are betting on the generation of renewable energies, and it is understandable since the one that invests in renewable energy recovers its investment approximately in 20 years. So it is crucial that there is confidence in the country, and that's why for instance, Europe has a faster growth of the renewable energies than in Argentina.
Yes, the cost of capital in Argentina is quite high to enable new energies to develop correctly in our country.
Okay, thank you.
The question.
I have a question.
Okay, thank you, guys. First of all, congratulations, you did a great job.
Thank you.
So I want to point a corporate governance issue. My question is, what do you think it would happen if
Sorry, Marcelo, we couldn't hear you properly.
Did you hear the question?
Did you mean that
what
would happen?
It was yes, my question is just addressing the corporate governance issue, no? And what do you think if suddenly Miguel Galuccio leaves the company? I mean, just in the value of the company of the presence of such an important person.
Okay, Miguel Galuccio is so important for the company because he was the chairman of the board of directors of YPF also, the Argentina largest company, oil company, which by his tenure show an excellent performance. So he has a lot of experience to apport to the Vista Oil and Gas.
Another reason that we believe why a good quality management team it's important, it's because in this kind of industries where resources are scarce, it's so important to have a good management of them during their lifetime. To put that in number, for example, we can see that Vista has the highest sales to capex ratio, for example, and we could also see the effect of having a good management team if we look at the 50% reduction in lifting costs during the last two years. So we strongly believe that if Galuccio leave the company, of course that it could hurt us. But we also believe that the rest of the team have a lot of experience and they have a good education to keep running the business properly.
So basically, what we think is that it will damage the image with investor, as Galuccio is like the main image of Vista. But we think that the team will still be able to perform as the highest productivity team in the Vaca Muerta creation.
Remember that, bear in mind that the other part of the management also has more than 15 years of experience in the yield, in the field.
Okay, thank you very much.
Hey, hello.
Hello.
Congratulations, it was so nice, clear and concrete. But my question is that when you made the evaluation, you believe that the stock might be $6.19, but currently the market priced it at $2.80 today, maybe. Do you think that the market is wrong or is missing something, or what is the market seeing that is not seen in the analysis that you have done?
Right.
Okay, so we believe that there was a huge overreaction, mainly in this industry. We can see it across all the companies in this industry. They fell more than 50%. And the same happened with the hotels and airlines. But the company last year was at $6, and the oil price was at the same price than today. And the company still couldn't recover to that price. So we believe that this difference is explained by this overreaction that has happened with the coronavirus lockdowns.
Okay.
Yeah, we believe that the period of time where we had to evaluate this company was in a very depressed market. Now the stock were in minimum historical levels. So we believe that this is why we have as well a huge potential upside regarding to our recommendation.
Okay, so you believe that the market is wrong?
Yes.
We believe that there was an overreaction, and soon the market will catch up to.
And
Yeah.
probably the market doesn't do not know about the productivity of the firm, or that do not know Galuccio or the team, or how efficiently the firm operates.
Okay.
Can I build on this question? Sorry.
Yes.
Sorry, no, just continuing with Sharmina's question about what you're saying. What drivers do you see in the short term? I mean, Argentina already, like, they had the renegotiation of the debt, which other Argentinian companies were much more positive in terms of their stock valuation in the last month. What drivers do you see, I mean, in the short and mid-term in terms of the stock market and the company's price?
Well, we believe that first we're going to see, we are seeing right now high recovery of the oil price. We believe that is it's going to be one of the key, more important things that would raise stock price. And we also expect a growth and a reaction of the activity in Argentina. And we also believe that the activity in Argentina is one of the most important key to analyze the demand of oil and gas. And of course, this would affect Visa's revenue. So we believe that when demand recover and price recover again, we are going to see a bullish market in Visa oil and gas stock.
We also believe that
1 minute left. One more minute for the Q&A session.
Okay, so we also believe that with those high prices in commodities, Argentinian farm industry will mean a huge demand in oil. So Vista will end up favorably from this factor as well.
And regarding to crisis and debt, we we take this into account in our high cost of equity that we put in our weighted average cost of capital to discount cash flows.
Excuse me, I have a final question because I see we have little time. It's more of a comment and a question. When you made the multiples valuation, there's something that bugs me a little bit. You stated perfectly. It was great that you said about the Valuation effect, that they have a cap both sides. How did you take that into consideration when valuing multiples? Because there was not much representation of local companies that have the same effect on their prices. Did you make any adjustments or anything to the valuation, to the multiple valuation? Or, for example, did that take something that has something to do with the 30/70 share that you took to make the whole valuation of the company?
Well,
so yes, we consider it about applying a discount to the relative company as they don't have that hedge as Vista, but also Vista has a much higher cost of capital. So like this would compensate that factor. So we decided finally to not include a discount. Yes.
Yes.
Excellent answer. Thank you.
And yes, the reason why we gave more weighted to the DCF was that the comparables were not perfectly for similar to Vista, and with DCF we can analyze in a deeper way the variables that affect the company. So we weighted 70% to DCF and only 30% to multiple approach, and we wanted to add the sum of the market.
Furthermore, the sensitivity analysis and the Monte Carlo simulation that we performed in DCF gave us the opportunity to test the solidity of the model. These are things that the map does not include. But as Massimo said, we consider appropriate to perform it to add some market sound. Besides that, we could not find a large number of peers, and logically may exist differences, as you said, Mateo, among the companies. So that is why we choose this approach, 30% and 70% for the DCF.
So you cap the Monte Carlo.
Mateo, sorry.
Sorry. So you cap the Monte Carlo analysis to take that into consideration, the sensitivity of our prices.
Yes, we incorporate these boundaries in our Monte Carlo simulation.
Right. Thank you very much for the answer.
Okay.
Okay, thank you very much, team number one. We are going to give, if you want, 1 minute for the judges to write down their marks and their comments on team number one, and then we are going to move to team number two.
Okay, congratulations to team number one. Team number two, let's start getting ready. All right, let me introduce you to team number two, Lucas Ascoitia, Alejandro Izapavia, y Agustín Guidetti.
Thank you, Javier. Fede, do you tell us when to start?
I will put the time right now. Are you ready?
Yes.
Okay, go.
Hi, we are pleased to present our analysis of Vista Oil and Gas, for which we have issued a buy recommendation with a target price of $4.30. Vista Oil and Gas is an exploration and production company which started its operations in April of 2018 after acquiring assets from Pampa Energy and Plus Petrol. In its first 2 years of operations, Vista increased its production by 19% from year to year. Also, the company reached an all-time peak production in June of the current year with 2 of its third pad wells of Bajada del Palo Este breaking monthly production records in Vaca Muerta. Based on 2019 production, the company positioned itself as the 4th largest producer of oil in Argentina.
Now I'm going to talk about the industry overview. According to our Porter 5 Forces analysis, we can conclude that the oil and gas industry has low bargaining power of buyer because prices are set by the main benchmarks, high bargaining power of suppliers because some big suppliers can alter the global prices, low threats of new entrants because of the massive capital expenditures and large regulation, among others, a high competitive rivalry because of the presence of a few larger-scale entities that dominate most of the industry, and high threats of substitute products because alternate means of energy have the potential to replace hydrocarbons in the future. Talking about environmental, social, and governance, first of all, the company is highly committed to the preservation of the environment, introducing new technologies to reduce its footprints and incorporating sustainable practices in its operation. Also, Vista is committed to the development of the communities in which it operates, with an inclusive business model reinforcing the sense of belonging through initiative of open dialogue, active business model reinforcing the sense of belonging through initiative of open dialogue, cooperation, volunteering, and social commitment. Finally, Vista has a board of directors that is made up entirely of professionals of international caliber, a management team that has plenty of experience in the industry, particularly in Vaca Muerta.
Now, about our basic recommendation, we have 5 mainly. The first one and most important, Vaca Muerta, we can say it is the crown jewel. The company growth plan focuses on the exploitation of the wells that it has in this location. In this basin, Vista has more than 435 wells, whose productivity is among the best in Vaca Muerta. Also, Vista has a higher reserve replacement ratio than his competitors, and we have the confidence in the current president and CEO of the company, Miguel Galucio. He has more than 25 years of experience in the energy industry, and he has a petroleum engineering degree from Instituto Tecnológico de Buenos Aires. Also, we did evaluation and financial analysis. About the valuation analysis, we carry out 2 different valuation methodologies. The first one, the income approach. We didn't perform a normal DCF because Vista is a company dedicated mainly to the upstream sector, and it is not possible to assume a perpetual growth because at some point the reserves are going to run out. We assume that the company will not add more reserves and that it will produce all of them until they run out completely. To carry out this model, we made the following assumptions, and we arrived at an intrinsic value of $4.3 per share. About the production, we divided our production projections according to the different types of assets that Vista owns and estimate the total amount of reserves that the company owns. Overall, we estimate that Vista production will grow until reaching a maximum production in 2036 due to the development of Bajada del Palo Este, and that from 2037 onwards, production will begin to decrease until reserves are completely depleted in 2047. Agustin.
Regarding lifting costs, from 2018 to the second quarter of 2020, the company reduced its lifting cost by 33%. We estimated that the company will become even more efficient in terms of operating costs, reducing its average lifting cost by 2% annually, thanks to the effect of the learning curve and the achievement of economies of scale due to a greater increase in production, until reaching a minimum lifting cost in 2025, maintaining it until 2036. From 2037 onwards, we estimate that the lifting cost will increase by 2% annually due to a production drop and the loss of the economies of scale that were reached. Regarding CAPEX from 2018 to 2019, Vista increased its CAPEX by 72%. For the current year, Vista's CAPEX has decreased considerably due to the ongoing pandemic, For the fourth quarter, we estimated that Vista will invest about $20 million, 30% less compared to 2019. And from 2021, a year in which we believe that Vista will resume its expansion plan and start to grow again, until 2036, year in which the drilling and completion of the wells located in Bajada del Palo Este will have been completed, we estimated that the company will increase its capex year by year. We divided our capex estimates into three parts. On the one hand, we took into account the drilling and completion cost for the wells located in Bajada del Palo Este. Also, when no more wells are drilled and completed in this location, we estimated investments to counteract the decrease in productivity. On the other hand, we estimated investments to offset the decrease in productivity of conventional assets located in Argentina. And finally, we estimated investments in infrastructure that were calculated as a percentage of sales.
Talking about prices, from 2018 to the third quarter of 2020, the effective price of barrel of oil equivalent decreased by 40%. However, we believe that prices will rise in the following years. To calculate the oil and gas prices of 2020, we made an average of the prices of the first 3 quarters and the future prices of the last quarter. To calculate prices of the following years, we relied on a report made by Deloitte, in which prices are determined by an analysis of the historical prices and future prices. To calculate the natural gas liquid price of 2020, we took into account the price paid by IEASA to import natural gas liquid in June, and for the following years, we add a 2% annually. Regarding revenue, EBITDA, and EBITDA margin, Vista increased all of the mentioned metrics from 2018 to 2019 due to the increase in production. However, if we compare 2019 to September of 2020, trailing 12 months, these metrics decreased due to lower prices and production. We estimate that these metrics will rise until 2036 and decrease from 2037 onwards, following of the evolution of production.
Talking about the WACC, to calculate the cost of equity, we use a risk-free rate corresponding to the 10-year US Treasury bonds rate, a market risk premium, and a leverage beta that we obtained from the comparable companies. After that, we added additional risk factors, such as a size premium and a country risk premium, which we arrived at by averaging the last 5 years. To estimate the cost of debt, we averaged the annual nominal rate of corporate bond in dollars of Argentinian companies, and then deducted the income tax rate from this average. Furthermore, the market approach, we decided to value the company through the market approach, taking the enterprise value EBITDA multiple as a reference, in order to challenge our assumption made for the income approach method. We used 8 comparable companies from the oil and gas industry, particularly from the upstream sector, in order to carry out the most accurate comparison possible, and obtain a reference multiple by averaging their enterprise value EBITDA multiples. We ended up obtaining a very similar value to the one that was obtained through the income approach. Finally, the risk analysis. We took into account the risk related to Vista as a company, the business and industry, as well as the countries in which the company operates, and determined that this investment is quite risky. However, we conclude that Vista's strengths outweigh the risks associated to the investment and issue a buy recommendation. Thank you very much. We are open to questions.
Okay, congratulations, team number 2. You have more than a minute left, but let's start with a Q&A. Judges, 10 minutes for questions. Are you ready? All right, you have the floor.
Okay, I am going to make the first question. First, congratulations. The presentation was so good, nice, and clear. I saw that you mentioned the natural gas production. I believe that it tends to disappear due to low profitability, or what do you think about?
Yes, here in Argentina, it's going to disappear for sure, because, for example, YPF canceled all the exportation of NGL to outside the country because the cost is higher than the price nowadays. But yes, we believe that it's going to disappear.
And what do you believe about the country? That we use a lot of natural gas today.
We use, yes, we use natural gas, but this is a liquid natural gas. That's why there is a difference. And the cost of liquid natural gas is higher than the natural gas.
Yes.
Can you repeat the question, please? I couldn't answer. I couldn't hear, sorry.
Yes, I believe, looking at the presentation, that natural gas is going to disappear because the production is so low.
In our estimates or in general?
In general. In the numbers today, if you compare with the other productions, with oil.
With today,
in the company, that the company is going to stop and don't make more extraction of natural gas.
we estimated that it will produce all natural gas until the reserves of natural gas run out, that they are going to run out before oil, and that's why at some point the company would stop producing natural gas. And for the general, that's what Alejandro said.
If you compare the profitability, is not good. The company use some resources to this. So I believe that it's going to disappear and make a change.
Yes, if the prices continue to being so low, maybe it will disappear, but we expect the prices to be higher and Vista's cost to reduce, and that's why, and we don't believe that that will affect Vista's profitability.
Thank you.
Hi. First of all, a great presentation. Congratulations to all the team. Also, it's been a pleasure to see you guys. I wanted to ask, in terms of what you just mentioned, cost reduction, how do you see in the next years, what factors do you see that will make Vista lower their lifting cost and their production cost in general?
We think that EBITDA margin will increase due to the increase in production and the rise in the prices that the company sells, as the lower costs generated by the great efficiency of the company, like learning costs, for example.
Yes, we can see that historically Vista was able to reduce its lifting cost every quarter except from the last quarter. And we believe that that was mainly due to the pandemic, and that in the next years is going to be able to reduce even more the lifting cost due to mainly a bigger knowledge of the industry, because it's a recent company. That's why we set the learning curve, and also a bigger production will tend to give economies of scale for the company to reduce its operating costs.
Okay, thanks very much.
I have a question now, sorry, here. First of all, like my fellow jurors, congratulations. Well, all of you, all the teams made an excellent effort, a great job on these research reports. I don't know, because we don't know which presentation regards to which report, but I can guess, I think, who's who on this one. I think that some bits of the risks analysis were left out in the presentation. So I'm going to ask you, what do you think are the main risks for the company operating in the Argentinian market right now? Is it regulation? Is it oil prices? How does Argentina affect the valuation of the company?
Well, we believe that Argentina affects the valuation through regulations. For example, what happened to the pandemic, that the operations need to be closed because of the of the government's decision. Also, the insecurity that the company has, because what happened also with YPF, that the government decided in 2012 to take over YPF, and
In addition to Agustin, also the cost of debt that companies in Argentina take here is very high.
We also consider environmental regulation could affect both business operation and financial situation, limiting access to researches, establishing production controls, and imposing the payment of new taxes, among other things.
And let me ask you a tiny bit more, one tiny bit more question. It's a great point about the cost of debt. How do you think that the actual cost of debt and the projected cost of debt is going to alter the company's capital structure?
We believe that in the future, now with the government solved the problem with the debt, we believe that the cost of debt will decrease in the future. It won't be a big problem for Pista. So for the investment, the future investor will have more confidence in invest in this company.
Yes. In addition, for example, liquidity in the previous to the last quarter was better because companies, particularly in this industry, had to take a lot of debt in order to exist. And we believe that in the future, when the pandemic is solved, companies will become more normal, and
the slow down and taking much more debt. I get what you mean.
Sorry.
Yeah, no problem.
Sorry guys, congratulations for the presentation. Taking into account what you just answered to Mateo as regards Argentina risk, do you feel comfortable forecasting 20 years in Argentina?
Sorry, can you repeat? I didn't understand the last part.
If you feel comfortable forecasting more than 20 years for a company in Argentina?
It's so hard to forecast in Argentina more than...
Now, if we are honest, of course, we are not comfortable, but you can show this class of reports to an investor and you do a forecast 5 years in the future. It is like now. The right thing is to do a long forecast.
We were based on the Deloitte report, but you will never know what will happen in Argentina. So dynamic.
Okay. Yes, we know.
1 minute.
Just a question, guys. In line of Mateo's question, I mean risk analysis. I was thinking if you took into account what could be the weight of the political factor in a country like Argentina, playing the same field with a company or a great company like YPF, and that could be you could be trapped as a small company in some kind of irrational rule of business. No, did you take into account?
Sorry, I didn't understand the question. Can you please repeat it?
Okay, the political factor in Argentina to be in the oil and gas sector, especially just competing with the giant YPF, no? If this takes a huge or not so relevant effect in the value of the company.
Well, we think that affects the company. Depends also in the government that is at the time in Argentina. There are some governments that prefer more competitive markets, while some governments prefer more markets that are more favorable to YPF.
Yes,
And
let's put just a window of for 5 years, only 5 years of politics.
It will
What do you
depend
think?
the price controls that the government wants to put like
Now we can say that YPF, yes, it is a big competitor, and in Argentina we used to follow YPF prices in the future. So, for example, the last raise of the price was 4.5%. So yes, it's affect to Vista because YPF it is the main competitor. He put the prices here in Argentina.
Thank you very much.
Okay, thank you very much.
Remember the golden rule. Who has the goal, make the rule.
Exactly.
Okay, thank you very much to team number 2 and the judges. Very good insights, questions. Very nice to hear some point of view on these subjects. Let's give a minute to the judges to take notes, and we'll continue with team number 3. Thank you again.
Okay, perfect. Once the judges continue making their notes and the marks for team number 2, let me introduce to yourself team number 3. Team number 3 was tutored by Javier Alba, and it consists of 5 students, which are Mariana Casanova, René Del Bubri, Valeria Bocco, Alain Fiore, and Agostina Bianchetti. So now you have 10 minutes to give your presentation. After that, as well as we did with the other 2 teams, you have 10 minutes for the Q&A session. So let me know who's going to share the screen, and we're going to get started.
I am sharing the screen, Fede.
Perfect. Whenever you're ready, I'll start with the timer. So good luck with it.
Okay, good evening everyone, and thank you very much for joining us today. Our group is composed of Agostina, Alain, Valeria, Mariana, and René. We are pleased to present our financial analysis of Vista Oil and Gas SADCB, which will just be called Vista from now on. We have issued a buy recommendation with a target price of $4.7, which represents a 111.71% upside from the closing price of November the 6th of 2020. Our buy recommendation is based on 4 key pillars. The first one is the increasing in the efficiency that they are achieving thanks to the company new technologies, which allows them to increase the performance of their wells and the optimization of their operational cost structure. Secondly, the investment in CapEx are leading to a performance improvement by improving increasing production and reducing costs. In third place, their assets in Vaca Muerta are in a potential location. And the last pillar is the board of directors know-how, their presence on the daily operation and the relevant experience in the field. Vista is a Mexico-based company engaged in the energy sector, mainly in the upstream to midstream sector of the oil and gas industry. The company focuses on the identification, acquisition, and development of oil and gas fields, primarily in Mexico and Argentina. According to the Argentina Ministry of Energy and Mining, Vista is the 5th largest oil producer in the country, being a key player in Vaca Muerta shale oil there. Vista's main assets and potential source of income are located there in Vaca Muerta, Argentina, which is one of the largest shale oils and gas reserves worldwide. Regarding to the environmental, the regulation of the petrochemical manufacturing industry has been growing due to environmental disaster, and it is expected to continue increasing in the following years. Vista is on its way to reducing the environmental impacts that this operation can cause. So this way, through some sustainable practices, they try to minimize the truck and transportation by transferring the 99% of hydrocarbon production through ducts in Bajada del Palo Este.
Vista is involved in some social projects in the communities where they carry out their operations related to health, sports, and education. In addition, Vista is subject to Mexican, Argentina, and international anti-corruption, bribery, and money laundering laws. Regarding the governance, the executive team is integrated by Miguel Galucio, CEO, Pablo Verapinto, CFO, Juan Garobay, COO, Alejandro Chanakov, Director of Strategic Planning and Relations with Investors, and Alex Garcia, CEO of Mexico. All of them have highly experience in oil and gas management. Before diving deeper into our analysis, let's talk about the context in which Vista operates. Over the last 5 years, revenue in the E&P industry has fluctuated primarily due to substantial swings in commodity prices, specifically in Brent and Henry Hub natural gas benchmark, where prices moderately recovered in the middle of the period before trembling again in 2019 and this year due to lower aggregate demand for oil streaming from the coronavirus outbreak. In order to understand deeply the industry in which Vista operates, we will briefly summarize the 5 forces analysis. The E&P industry is subject to a high level of competition. Companies compete mainly on the basis of cost and factors such as crude oil grades, impurity level, and capability to acquire resources. In this industry, there are several companies engaged in the sourcing of materials and crucial services to the oil and gas sector. The global scale of production creates the opportunity for many small companies to dilute the market, so the supplier power is low. Crude oil and gas are vital inputs in a variety of industries, so the demand remains to be inelastic of its multiple use and implication. Therefore, the buyer power is low. The existing relationships that incumbent companies have with the government, the higher capital costs, and the required licenses generate significant barriers for newcomers, so the trade of new entrants is protected by this. Because of the global trend and accelerating growth of the other sources of energy, the industry experienced limited by growing competition from other fuels like renewable energies and substitute fuels. Therefore, threat of substitute is medium.
The exploration and production sector in Latin America is becoming increasingly attractive to investors. This is mainly because of the continuous and successful development of Vaca Muerta in Argentina, as the only large-scale formation of unconventional deposits outside North America. We now invite you to understand Vista's price and increase in value by analyzing its finance, its valuation, and its key associate risk. First, we would like to talk about Vista's revenues. At the end of December in 2019, Vista's revenues were composed as follows: 81% from crude oil sales, 17% from natural gas sales, and the rest from NGL sales. Vista has shown for the last 2 years a growth in rates, with the exception of this year due to coronavirus. Oil price has shown a pattern among time, but due to coronavirus too, prices have abruptly fallen from $75 per barrel in 2018 to $35 per barrel this year. Our estimation of Vista's revenues were based on prices and production. In terms of international prices and considering the world current context, we expect oil and gas prices to keep rising, with no significant changes as the ones from coronavirus. Concerning quantity, we predict, and since 2020 quarterly results growth rates have improved, that revenues will continue to grow in the future. According to some projections on the oil market in Latin America, the market will increase its volume until 2040, where it will reach its peak and then it will begin to decrease. In this sense, we estimate Vista will focus on the development of their current assets to increase their production and reserves, so that their sales will cyclically accompany the market demand.
Well, now moving into CapEx, over the last 2 years, Vista had invested more than 350 million in CapEx. They have financed and are expected to continue financing their capital expenditures with cash generated from operations and existing cash and equivalents. So based on this, to estimate investments in CapEx, we related to a weighted average of sales for the current year and sales in the previous years, giving it greater weight of 75% to the current ones. In this way, the estimated CapEx tends to grow steadily alongside sales year by year until 2033, at which point growth in proven reserves will stabilize due to the decrease in investments in CapEx. Regarding now costs, Vista is continuously seeking to reduce their operating costs. The company actually spends around $9.50 for each barrel, and they expect to reduce that number. So the lifting cost, for example, for the third quarter of 2020 was of $9.09 per barrel, 19% lower than the lifting cost of September of 2019. So in order to estimate Vista's costs, we took into account the cost of previous years, as well as projections that the company have for their cost reduction. Moving now into our valuation model, our target price calculation is based
80% on the net asset value methodology, and 20% on the relative valuation methodology, which is based on comparable peers where we use the enterprise value to EBITDA multiple. At the time of performing the NAV valuation, we decided to discount the cash flows for the next 25 years with the same rate, arriving at an 18.9% weighted average cost of capital for Vista Oil and Gas. So to calculate the cost of equity, we use the capital asset pricing model adjusted by the risk-free, the equity risk premium, and an average country risk premium, weighting in 80% to Argentina and 20% to Mexico. To project then the cost of debt, we estimate an average yield to maturity from Vista's bonds in dollars and bonds in dollars of its peers, considering Vista's tax rate of 30%. For debt to equity ratio and the beta, we use then the same rate of peers that we use for the relative valuation methodology.
For our relative valuation, we constructed a list of 7 comparable peers based on the criteria that all of them must belong to the upstream sector of the oil and gas industry, leaving aside those that are fully integrated. And the average market cap should be approximately $325 billion. Knowing the average industry multiple and Vista's EBITDA, we obtain the relative stock price of $4.59, which is higher than the current one, and of course, the price of the valuation of date. Now I'm going to talk about the risks. It's commonly known that majority of investment decisions involve different risks. That's why through our analysis, we have taken into account several of them. First, about strategic risks, the oil and natural gas industry requires large investments in capital goods. So if Vista revenues decline as a result of a declining in oil and gas prices, operating difficulties or decreases in reserves, or for any other reason, Vista may have limited his ability to obtain the capital necessary to maintain its operations at current levels. Regarding Argentina's risks, final consumer fuel prices in domestic markets are set in local currency, and the refining companies have not been able to pass on the devaluation of the Argentine peso to the distributors, and the volatility of it is very high. So this is an inherent risk to the country in which Vista operates. About operational risks, operation may be restricted, delayed, or cancelled due to adverse conditions. And finally, about markets and global risks, the planet's main energy source has a fixed reference price. It is traded as a commodity, thus is determined by global supply and demand, where OPEC has a significant influence by controlling nearly 73% of global reserves and producing 43% of world's total oil. So to conclude, and based on what we have just mentioned, we demonstrate that Vista is trading below its potential, and that's why we're confident to issue a strong buy recommendation on Vista stock. Thank you very much for your attention, and we are happy to answer any questions or comments you might have, so please feel free to ask them.
Okay, thank you very much for your presentation. That's been really good. Now let's move forward to the Q&A session. So judges, it's all yours.
Okay, thank you very much. It was so clear. I could enjoy it very much. Congratulations. I have a doubt about the Brent oil price. I saw that you estimate using the time series regressions, and the price seems to go infinite rise. Do you think that it's logical, or what do you take into account? In this analysis, I believe that, for example, alternative energies or some risk like if Galucho decides to go out is not taken into account.
Yes, we consider the regression analysis that's the best choice for estimating the price due to the fact that the historical data provides an insight of how sales will be affected by the change in the price of the market. So we took the price since 1990 to the present, and yes, we consider that it's important to take into account that oil and gas is not a renewable energy, and even though there are some substitutes that yes, this may change things, we must consider first of all the term we are projecting, and even though there's a rising in the production and acceleration in the renewable sources, we must consider that oil and gas has an inelastic demand. So for that, we must take into account the supply and the demand offer, and because of this, the price will tend to increase in the future.
Together, oh, sorry. No, together with what Rene said, it's mainly because for the moment of our estimation that it was for 25 years, we don't think that we think that the price will increase because, as she said, renewable sources are becoming to take more relevance in the world now, but not in the period that we are estimating our cash flow and our valuation. We don't think that it will like supply oil, for example. So we consider like logical that for that term prices will increase in general for non-renewable sources.
I believe a key factor that we have to understand is that we are evaluating an industry that the main asset is the oil, and this is not renewable resource. So we have based our estimation on some projections on the oil demand, and it was the oil demand will expecting to continue growing globally to 2040 approximately. And the offer will be limited because we are talking about not renewable assets. So the price we expect to continue growing because of the difference between the demand and supply.
Okay, thank you. So if I take into account your recommendation that the costs are lower and the price are going high, I have to buy it.
Yes,
definitely.
Okay, well, first, congratulations, great job. What can you tell us about the cost of debt that you calculate? That 5%, please.
Well, for the cost of debt, what we did was we take into account the Vistas bonds, but the ones they have in dollars, not in the local market. So. To be sure, we use some bonds also of their peers because we thought that it was a better estimation because of the low quantity of bonds in dollars that we could have to use a yield to maturity. So that's why we used all those bonds in dollars and we ponderated and well with the tax rate.
Yes, we ponderate the yield to maturity using these 3 bonds of Vista and of their comps, the peers.
Peers outside Argentina?
Yes, yes. That's why we only took the bonds in dollars.
Dollar bonds, yes. Not the ones locally.
Okay, one question. I think that you know that most of the teams made buy advice, no? Yeah. So my sense is that I'm not sure, but there's 2 ways to issue a buy advice. One of them is because you know or you guess there's some value over there. Okay, I mean the right side. But in the other hand, you could be seeing that it's not possible to the companies is coming down more than it is. What's your think about that?
I'm sorry, I didn't understand the question. You mean why we estimate a huge growing in the operations?
No, yes. No. It's just a feeling. What's your feeling about it? Is there really you are just convinced that there is really some value over there in your forecasts, or on the other hand, you are convinced that the company is so it's a bargain. I mean, it's impossible to go down.
Yes, analyzing the price of the company stock a year ago from now, you can look that it's much higher than the one that we see today. Due to coronavirus, many stock prices in many industries fall a huge amount of percentage, and they are still recovering. Maybe some industries, such as technology companies, just recover from that, but this industry maybe isn't recovered yet. So we believe that it's going to increase in the future due to that.
I think it's not unrealistic to think that it's not going to go down by a lot of considerations we have taken into account. But we think, as my friend says before, there are different aspects that is important to mention related to the company and the management, and also to the alternative source of energy that we are not we are in an emerged country, so these sources are going to be in our country later. So we will need a lot of oil and gas for a lot of years still in the future.
I also think, as they say, that it's logically that the stock price now it's not high because of this situation, but we should consider all the efforts that Vista made to recover from these situations that were really good, because they could be being not this good nowadays, but they did a really good effort, and that is due to all the technologies and their investment in technology and a better design of their wells. So I think they have a potential to continue growing and to continue being better, although there are obstacles that they have nowadays.
Thank you very much.
I have a quick question. Sorry.
Now, to think that is a company that has only 3 years of history, so it's really new, and his performance is really good. So the cost is comparable to the first one in the market.
Great. I'm going to ask a quick question. I think it was quite clear. I want to congratulate you for your presentation. At the beginning, you said that Vista is an upstream, midstream company. What are the weightings on that upstream, midstream activity on the main activity of the company?
Vista is engaged almost totally in the upstream activity. It is the exploration and production activity. In last year, in August, I believe, they have acquired the Aleph midstream to starting in this stream activity. So at the moment, they are not in this midstream activity, in the distribution, but they will be.
But the focus of the activity is on upstream, not midstream.
Yes. Nowadays, yes.
It's more of
it's a subsidiarity.
Yes.
Okay, perfect. Thank you very much, team number 3, for your presentation and your answers to all the difficult questions that the judges are making. So thank you for this. So we're going to give 1 minute for them to make their marks, their notes, their comments, and then we're going to move to team number 4, which is the last one.
All right, congratulations, team number 3. Very, very good presentation. Team number 4, if you want to start getting set up. Okay, team number 4. Milagros Prieto, Juan Solans, Lucía Chamas y Juan Gutman. Are you ready, guys?
Yes,
sure. All right. Let me get the clock. Okay, 10 minutes, go.
Okay. Oh, sorry, give me 1 second. I'm having a problem with the presentation.
Okay, let's stop the time.
That's fine. Thanks.
Okay, let's restart the 10 minutes when you said so.
Now.
Go.
Well, Vista Oil and Gas describes itself as a new generation publicly traded Latin America Austrian oil and gas company. This firm is led by the renowned Miguel Galuccio, president and CEO, who holds a highly regarded trajectory in the industry of the oil and gas. The company has a 3-product portfolio of shale oil, natural gas, and NGL. As a total, Vista holds 13 oil and gas concessions in Argentina and Mexico, where it targets shale and conventional oil. Regarding the history of the company, Vista started operations in Argentina with acquisitions representing 55.7 million barrels of oil equivalent of proved reserves as of December 2016. In the year 2017, it was born as a SPAC in Mexico as an offshore oil and gas company. In 2018, the firm acquired 2 companies with an operative platform in Argentina, and the following year, it was listed on the NYSE. By the end of 2018, the company had over 400 drill wells. By February of this year, the firm had drilled and completed 12 new wells also in Vaca Muerta, with strong productivity levels, showcasing its acreage quality and its growth potential. The company currently has operations in Argentina and Mexico, and it's evaluating opportunities in Brazil and Colombia, which are strong markets. As for these 4 countries, those represent an opportunity to develop world-class assets. Vista had 3 key value drivers: its prime acreage development, a solid infrastructure foundation, and one, if not the best team in the region.
Well, in our investment summary, we issued a buy recommendation invest with a target price of NYSE of $4.87 per share, given our assessment. This represents a 47% upside from the company's closing price of $2.25 on November the 6th of this year. Our recommendation lays on the following 4 key foundations. The first one is our forecast for the next years. We are positive Vista will have a significant growth potential, despite being offset by negative macro conditions, not only in its region, but also with extraordinary events, like the coronavirus pandemic. The second key catalysis, we consider Vista an overweighted stock. Therefore, it deserves a higher weighting than the benchmark's current, which means we believe that it deserves a higher weighting than the benchmark's current. And well, we believe the stock company price should perform better in the future. Thirdly, one of the grounds of our valuation resides on the identification of more than 400 wells. Starting year 2020, we added to our predictions the identification of more an estimate of the reserves of 608 million of barrels of oil equivalent. And last but not least, we took into account the volatility of the industry. Nonetheless, Vista has a significantly lower risk than the industry's average, with a beta of 0.52. Also, the company currently holds a cash per share ratio of 2.57. This can make the company an attractive takeover target, given it will continue generating positive cash flow.
Going to the industry, the oil industry is some exploration, extraction, refining, transporting, and marketing activities of petroleum products. The hydrocarbon is used as the most traded index in markets around the world, being commonly referred to as black gold, and holding a share of 2% in the S&P 500 index. Commercially speaking, prices are determined by a basket of oil goods, which are measured in barrels, with 1 barrel equaling 159 liters. The standard measure for products in the market is MMBO, which is million barrels of oil equivalent. Vaca Muerta was discovered in 2010 and is a geologic formation located in the Neuquén Basin in Argentina. It is well known as the host rock for major deposits of shale oil and shale gas. The formation has a total proven reserves of 927 million barrels, and today the main growth investments are focused on the development of non-conventional oil, with oil fields estimated to be 20% above conventional production. With regard to positioning, the firm has a total market share of around 2.9% in Argentina, being the second largest light crude oil producer in the country, with the main player being, of course, YPF. Regarding price volatility, Vista Oil and Gas has a beta of 0.52, with the average beta in the industry being 1.62. Analyzing the industry risk, we find the volatility of international prices, ever-changing regulations in the countries of operations, and government policies with interventions on assets. Moreover, climate change and its legally green implications could affect the strategies and yield of the business as a whole. Economic and political instability in the Latin American countries could negatively impact the business. Now, analyzing the company risk, we find a net debt of $297.1 million, with the total equity being $520.9 million.
Nowadays, a company that is not actively involved in taking care of the natural environment only undermines its chances of success and long-term growth. Luckily, Vista has adopted measures to reduce its carbon footprint, as pipelines for transplantation of hydrocarbon and sandboxes to reduce the silica air in the dust. Vista has also signed agreements with national organizations for technical assistance in these matters. Socially speaking, Vista has locally supported the development of Catriel without taking into account the benefits that this town gets from the sole activities of the company. This firm also worked with Enseña Argentina and Centro Pyme and has provided a quick response to the COVID pandemic, donating medical supplies and food through Somos Uno. As for its governance, we can mention that among its most renowned members, we find Juan Carlos Arobi, Alejandro Chorniakov, and Alex Garcia. Vista also holds a code of ethics and conduct that reaches the entirety of its organizational activities.
Well, going to the financials, we first examine the company's revenues. Sales growth shifted from 25.5% in 2019 to an estimate of a negative 36.8% this year. Consequently, EBITDA margins have decreased 11% approximately due to COVID crisis. During this year's third quarter, total revenues were 33.7% lower than in 2019, but 36.5% higher on quarter, driven to crude oil revenues. We estimated this behavior to continue in the future and took it into account for our revenues forecasts. For 2020, Vista Oil experienced a negative interannual variation in revenues, mostly driven by a reduction in production volumes and by lower realized prices of crude oil. Nevertheless, there was a positive variation in quarter-to-quarter revenues driven to the recovery of crude oil production and realized prices, which give us a sign that the company is slowly but surely picking up its pace. As for its lifting cost, naturally, there was a negative variation compared to last year, given to COVID-19 outbreak. However, lifting costs had increased since last quarter, reflecting the restart of pulling activities and other oilfield services back to pre-pandemic levels. As for CAPEX, during the third quarter of 2020, the company invested in Bajada del Palo Este oilfield. The expenses include drilling of wells and development of facilities as well. Additionally, the company invested in geophysical and geological studies, which makes a total of $36.8 million that reflect the ramp-up in activities in August this year. Examining the historical financial ratios of the firm, we noticed there has been an increase in liquidity in the period between 2018 and 2019, as well as a higher turnover in the efficiency ratios. The year 2020 exhibits extraordinary numbers, showcasing a negative impact the pandemic has had in the industry as a whole. Taking into account our projections for the upcoming years, a trend suggests a slow but steady increase in profitability and efficiency.
To evaluate the company, we projected from the fourth quarter of 2020 onwards. We applied the income and market approach methodologies, considering 95% and 5% of each respectively. For the income approach, we consider the company's own cash flow projections and the WACC of 12.7%. Making use of market estimations and historic information about prices and the company's reserves, we were able to value the share at $3.32. Given that the current market price is below that number at $2.25 per share as of November 6th, we conclude that the share price is underpriced. For the market approach, we examined 6 comparable companies, using primarily 3 metrics: odds of going through financial distress, cash per share ratio, and recent returns to investors. We then calculated the market average. By comparing Vista Oil and Gas to other comparable firms in the sector, we concluded that the market approach leaves us with a stock value of $34.41 per share.
1 minute.
By applying our ponderment of 95% income approach and 5% market approach, we consider that the stock price for Vista Oil should sit around $4.87 per share. Based on our valuation methodology, the company appears to be undervalued at $2.25 per share. In general, we recommend acquiring undervalued stocks and selling overvalued stocks, since at some point, asset prices and their ongoing real values will draw towards each other. In this case, we recommend buying the stock and holding it until it reaches a value over 4 because of its notorious market risk. Thank you very much. We are now open to questions.
Thank you very much, team number 4. Excellent presentation. Let's start with the Q&A. Judges, if you will.
I have a question. Sorry, here. I have the video now. I have a quick question. I know that you balanced it out with the weights of the final valuation between the income valuation and the market approach valuation, but isn't the market valuation a little bit off the charts compared to the other valuation? Did you do any kind of adjustments, make some adjustments to that?
Well, we apply this fundament because by comparing the company to others in the same industry, which is only upstream, we consider there's really not much room to compare because most comparable companies most companies that operate in the same area as Vista Oil are integrated. This means that they don't only focus on upstream as Vista. So this made us look for companies that don't necessarily operate in the same area as Vista Oil, but are comparable in terms of activity. So we decided not to give much influence to comparable companies, but by giving them a 5% influence in our valuation, we can get a rough estimation of where the company should be in terms of a higher or lower price. It's just to set a direction.
Okay, thank you very much.
Okay, well, first, congratulations, great presentation. In your financial analysis, you project a debt to equity that increased more than 60% compared to this year. There is any risk there? Thanks.
Sorry, any risk?
Yes, any risk because that ratio it's 60% higher this year than last year, for example, and the projection as well.
And the ratio, I'm sorry, which ratio? The one
debt to equity.
Debt to equity. Okay. We actually believe that the ratio has increased so much because the company in the last year has taken a lot of debt. And because of this, the debt is actually enormous in comparison to equity. And this reflects in this ratio.
And this has also been influenced by, of course, the coronavirus pandemic. According to data that we have researched, there has been a drop like in 5% in global markets. And this has, of course, impacted the oil industry because, as we said before, it is one of the most traded indexes around the world. So this was also not only affected by the pandemic, but also because of, at the time that we did this valuation, there was the time with the American presidential elections, and of course the work with Armenia and Azerbaijan. So like those were critical factors in that too.
Indeed.
Okay, thanks.
Hi, congratulations first of all. And I am going to continue about the question that makes Benja about the ratio. And if we look at the ROE, only in 2024 it is positive. Why do you think we are going to invest in a company that has negative ROE?
Because all our projections, we are expecting actually to improve in the future. We believe that, as Mili said before, the impact this year has had because of the COVID crisis has been huge, and all the repercussions and the results of the company have been affected because of this. So we believe it's a great factor, an enormous factor that we believe in the future will change effectively, and it's actually changing because the ROE from the last quarter is actually lower than this one. So it's actually improving, but at a slow pace, we could say. But we are positive that in the future will be increasing.
Yes, and
Additionally,
we are also we are taking into account that the ratios of the company don't look very promising for the near future, and that's why I made in my final statement, I said that you should hold the stock until it reaches value of 4. That's because of primarily volatility of and uncertainty of the future.
And additionally, I would like to add that Vista is like a new company. It has only started operations 3 years ago. So as we know, with digital transformation and with all innovations, they tend to grow exponentially during the first years. That's the kind of curve that they have. And of course, this has been exhibited through up until last year, because due to the COVID pandemic, that certainly was a shortcoming for the company. But we believe that they will continue with that tendency throughout at least the next few years. Like that's the regular kind of trend that we see throughout industries worldwide in any kind of sector.
Okay, thank you.
Thank you.
I have a question. First of all, congratulations. The presentation was also very good. We have a very hard task as judges. I wanted to ask, there was a very nice graph which showed investment in risk, and in Argentina, I think was like mid-impact. If you would have to think of the highest local risk in terms of the eventual downside in the company, what would you say it is? Regulation? Is it political? Currency issues? What would you take into account as the biggest local issue?
I think that the biggest protection that the company has in some point is like the political matters and how the government protects some companies in Argentina and some industries in order to don't make it disappear. But this same protection that they have and they own can be taken away really, really fastly. I mean, with the change of government and change of politics, and it could end very badly. But well, we are facing like some kind of trend, and if we look at the historical decisions from the governments in Argentina, we can consider that at least in the midterm, they are not going to change them, because these political decisions have the economic weight, but also the political weight, and being taken once in a while, they cannot be changing so swiftly.
Yeah, as we know, Argentina is not the most stable country. And as Juani said, there are several factors that compose this instability, both political and economical. They all go together, so they're deeply related. I would like to add another thing, I believe that to answer your question, I think that the biggest risk would be the political one, because it's the one that sets all the conditions for the market to function. And this way, there are policies and regulations that are established. For example, during October, I think, the Argentinian Central Bank issued a statement about companies that do not reside in the country with regards to currency. So of course, that's adding to the kind of risks that the company has, both inherently because of operations and of course the specific firm within the specific firm with that and all of that.
Yeah, and to add a little bit of what Mili said, we also believe that another great factor in order of risks that it's not only applied to Argentina but worldwide is the fact of the introduction of renewable energies. It's actually starting to be a trend worldwide, and everyone is starting to lower its consumption of old energies and start introducing the new ones, the renewable ones. So we believe that this actually is a great risk in our industry.
1 minute.
Just a question. What do you think? What do you say if I, for example, as a shareholder of Vista, feel that I have or that I hold a call option on future prices, like instead a share? What do you say for me? Is that correct to see Vista as a call option on future prices of oil? Today, I mean, no?
We think that that will be a rational option, and that maybe fundamented in the fact that the company itself has strong financial ground, and it's a quite productive one. And yes, you may argue that you have like stock that may go down or may crash. But if you analyze the company itself and the grounds that it's building, we trust that you have a safe asset in your hand, Marcelo.
Right. Thank you.
Do we have another question from the judges? No? Okay, well, thank you very much. Yes, Marcelo?
Thank you.
Thanks.
Okay, thank you very much to all 4 teams. Excellent job. Congratulations on all the researches. Okay, Fede, are you there? We are going to take a 10-minute break so the judges can put their scores on all 4 teams, and we'll be back with the winner. Okay, thank you.
Welcome back. Hello, everybody. We are back after a tight discussions between the members of the judges. Well, first of all, before moving into the announcement of the results, what I want to say is to congratulate all the students and other people who have taken part in today's competition. One thing that we had in common between all the people who have been watching you is the very, very professional and high quality level of all your oral presentations, as well as the answers that you had to the judges' questions. All the judges and all the professors that we are here today, we are all finance people, we work on finance in the finance field, and we all agree that the work that you have done is really, really very, very professional. So congratulations for your hard work. I think this experience that you have making all the analysis, because this wasn't done just in a couple of weeks. This was a process, yeah? You started like 3 or 4 months ago, especially considering the fact that this year was very strange, very weird with many things. You have been able to surpass any obstacle, yeah? To be honest, making a valuation of a company is something very difficult. And I say by myself that I work on valuation. And if we have the complexity that it's an Argentinian firm, that we are operating in a COVID environment, and that you're students because you don't have real world experience yet, that's a combination that you have been able to surpass, to face, and to really get to very, very high quality outputs and products that you have been doing. So apart from that, I really want to thank all of you and congratulate you for the great work that you have done. This is just an end for your, let's say, your 4th year career, but it's just the beginning, because I'm sure many of you are going to be working in the finance field. And I know that many of you have already started with having interviews and starting in different things. So this is a great way, and hope to get in contact with all of you from the university, yeah? Okay, guys, so now let's move to the most important part of today's event, because now we're going to announce the winners of today's competition. What I can say is that the 4 teams had a very high average. The lowest mark that any of the teams got, this is also going to be your mark for your final subject in your final dissertation. So the lowest mark was 8.4. That's something very high, yeah? And the highest mark that the team who is going to be the winner got 8.9. So what we can see from all this competition is that the level of competition between the 4 teams has been very, very deep and very tight. And now I'm in conditions to announce the winner of the competition, who, apart from enhancing your CV, is going to win some prizes, yeah? So that's something extra that you can get. So, the winner of Universidad Austral Finance Evaluation Competition, first edition 2020 is team number 1 that presented today, formed by Antonella Moschen, Ramiro Bazzone, Máximo Braida, Juan Cruz da Vega, and Patricio Barcelona. Congratulations, all of you.
Thank you very much.
Thank you very much.
It was hard work.
Thank you very much.
Excellent. Now, excellent presentations to all of the teams. It's been great. And also, one thing that I want to highlight is that this team that today won was the finalist as well in the official CFA competition. So it was really a great work from you team, from team number 1, as well as from all the 4 teams that had the chance of competing today. So congratulations.
Thank you very much.
Thank you.
Well, awesome. Well, any comments, the judges, the students, Javi, anyone want to say something to conclude?
I want to thank everyone who took part of this and made it all come together. Of course, I want to congratulate all the teams for a hard and wonderful job they did. Well, special thank you for the jury who took the time to evaluate all the researches. So thank you to all.
Well, I'd like just to say something in the name of the university, no? I have to say thanks to Javier, Fede, the whole team of finance department, Chacho, the whole team. You did a very, very great work. You're making some kind of piece of history of the university, because I think this first challenge is gonna be not the first of many of ones, not the last one, okay? So you earned the credit, and the whole university is watching this kind of initiatives to position our university as we want, that is a world-class university. So I feel really proud to be as board member of the university, to see presentations and the kind of this kind of events that raise the bar so high. So thank you very much, guys. For the teams, there's no winner, no loser. All of you made great work. You know that, and this is not only for just to give any kind of prize. This is about just to be how to say, it's self-rewarding. That's the word, self-rewarding. So any of you, it's keeping the prize, no? So congratulations, and it was a very, very good job, and we heard world-class presentations, as I said, no? And for my colleagues in the jury, I feel really, really comfortable sharing with you this judgment. And I think just to make these kind of things with responsibility and sense of humor and all of this sense of just to be in a family, I feel really comfortable with this. So thank you, all of you. I feel really, really, really glad for this presentation today.
I want to thank the university and all the professors for giving us the opportunity to make a presentation and this experience that is so great for us. We make a presentation in English, and we also evaluate a company that is strange for us.
Thank you, Anto, for your kind words and all your hard effort. I have witnessed the effort that all of you have made. So, well, thank you guys. I think it's over for now. And well, congratulations. The team that has won, as well as the jury, is going to have an award, a big box, so you can go and have lunch or dinner with some friends or some family. So then we will be sending you with email the things, like the voucher. So that's an extra incentive that you are going to have. Well, thank you very much. Have a nice end of year, a great 2021, and hope to see you soon.
Thank you.
Thank you, everyone.
Thank you, Fede.
Thank you.
Thanks, Fede.
Everyone.
Thank you.
Thank you. Thank you.
Bye.